We have three different mortgage funds. We have a Credit Mortgage Limited, which has been operating the longest, since 1994. The average return on the history of the company is just over 12%. Currently, we're only dividending at 6%. That's as a result of some of the delinquent mortgages that we have. As we work through these, our investment yield will start going back up again. But with every investment, yields go up and down slightly. The average yield over the long term has been 12% in that fund over the history of it. We have First Credit Mortgage Corporation, and I'm anticipating the yield this year to be about 9%. It's yielded between 8 and 10% since its inception. It's never had a change really in its formulas. It deals with only first mortgages, so it's the lowest risk fund that we have. The last fund we have is called GP MIC Fund Ltd, and it does high ratio second mortgages and more aggressive creative lending. It's yielded 14% to our investors historically to date, and this year I think we're dividending at between 10 and 12% on that investment. All of the funds over their history have yielded very well. But like any investment of this nature, the investments go up and down, the yields go up and down as the performance of the portfolio changes. We're right now in a stage where I'm anticipating our yields to start climbing back up again. They've gone down over the last year as a result of the economic conditions. We're seeing us come out of it, and we're anticipating the yields going up this year.
MICs are the best kept secret, and the primary reason is it's a small niche market. And it's not well advertised because they're small players or smaller players. We'd like to consider ourselves big players, but we're small fish in a big sea. The primary investment industry is controlled by banks and big institutions. They have the ability to do a lot of mass marketing. They're precluded from owning MICs because they can't control more than 25% of a class of shares under the law. Hence, they're not in this space. So the small investor never gets to hear about a mortgage investment corp. And it's been a growing field because it's primarily controlled by mortgage brokers, and so it's sort of a word-of-mouth transition. And it's been a great investment because they lend to where the banks won't lend. And just because a bank deems a loan not worthy of their dollars doesn't mean it's not a good investment. And that investment no longer tracks little wee bits of interest like a residential mortgage. Now because there's not a lot of competition and the demand for the funds is so great, the returns are there. It's a slow process of getting rich. Stock market is exciting. It's like going to Vegas. There's no justification on why one day a share is worth $1 and the next day it's worth $1 less. Whereas in mortgages, you know what the face value of your mortgage is, and you know that the interest it earned overnight is due and payable. And that just keeps growing and growing and growing, and that's how wealth is created. It's slow, it's boring, but it's very successful.